TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. Tom's still under the weather, and I suspect he'll be back tomorrow. Market-wise, we have out here, we get a wild market, folks. If we start off with the futures out here, what you're going to see yesterday, of course, you got hit in an incredible way. The futures actually went up limit this morning, folks. Up limit, we're up $79 right now. Up limit was 130. Got up there to 130, and listen, I've seen down limit many times. You don't see up limit too many times. Bottom line, you get a bounce out here. You get a good bounce out here. What's ironic about it actually is that you had Trump out there yesterday saying that they're going to come out with a package today. He's going to have a news conference today, and then the White House just come out a few minutes ago saying, well, listen, we're not ready yet. Bottom line, you can see how jumpy the market is, though the market was ready. That's what it comes down to. Now, one of the benchmarks out here, you want to keep your eye on this benchmark in a huge way. The benchmark that we're talking about, folks, is $280.40 inside the SPY. And what is that number? Well, here, check this out. This is pretty cool, man. This number is the highs of the lows of 2018. 280.40. So we closed at 274.23 yesterday. That market, by the way, the last 6 points went down there in about a heartbeat yesterday. We're going to jump over that today. And if we can stay over that number, yeah, you're going to not only get a sustained bounce, what I expect you're actually going to get is that this is going to be the next consolidation that's setting up. And it's a heck of a consolidation, by the way, okay? It's a monster consolidation. When you take a look at it, you're talking about almost a 20% consolidation, which for all you bulls out there, you should love, okay? Because the bottom line is that you've gone up so exponentially, it makes sense if you're going to get higher that you have to do some type of a consolidation out here. Now, let's go to the note and bond market, because this is really cool. We take a look at the note and bond market. We've been talking about the ABC structure on the way up in price, down in yield. Well, the ABC structure finished, folks. And after you finish an ABC structure, most times, whether it's up or down, most times you reverse course. Doesn't mean that you're reversing course on a longer-term basis. What it means specifically is that it's time for a pullback. As you look at the pullback, if the pullback's on lighter volume, bottom line, you are going to go topside once again if you've been going topside. And I can show you inside the 30 as well as the 10. You had your B point out here at 167.5 approximately. The A point was at 136.5, what, 46, 56, 66. You had 31 points. Your C point out here was 155, which gives you 186, and we got all the way into 193. So, when you take the context of the your futures bouncing a bit, right now the 30 years down 5 points. This baby will pull back, and you can expect a decent pullback too after you finish an incredible ABC structure on the way up. That is basically saying that okay, this market's going to have a chance to bounce. And then if we go over to the gold market, we take a look at the gold market. What you're going to see inside the gold market now, gold as well as silver really held up in that debacle out here yesterday. Most times, well, not most times, you never know when it's going to hold up or not hold up when you get a downdraft that's as dramatic as we got yesterday, the fast sell-off. Gold, bottom line, you're pulling back $11.20 out here today. You're at $16.64. You have light volume on the pullback. This is setting up the next leg up. If we go over to the dollar, what you're going to see inside the dollar out here, has a bounce going. The dollar broke the 95 level. That dollar now is going to build cause to get down to the 88 level. You know, we broke that with conviction, the 95. The 88 level is the lows that were established out here in February of 2018. So let's go to the oil market. Oil is absolutely crushed, man. Oil out here up $2.42 right now. You're at $33.54. We hit $27 yesterday. You did it with monster volume out here. It looks like bottom line is that we'll build a bit of cause here, bounce around. That $24 level, though, in gold, in the oil market is game. So you get a lot of moving pieces, but those moving pieces are in harmony with the rest of the market, meaning that at this particular point, you have the bond, the 10-year note, as well as the 30-year bond finish their ABC structure on the way up. They want to pull back. As they basically pull back, you can see the market itself wanted to jump higher. The real question out here is going to be, as we do move higher, is this going to just be a bounce, or is this going to be an aspect of the consolidation that we very well could have? Because it would be a monster consolidation. Now, you'll know that as to how we run up into the top of the range. If every time we run up to the top of the range, if the volume contracts dramatically, what it would mean is that you could go to lower price. If we run up and we actually have some action on the way up, then that's a different ball game. What you would get there is that then you'd set up a consolidation. Let's go take a look at GASL. We get a question, and what the question is GASL a broken levered ETF? No, it's not. All you have to do, so check this out. It's trading at 26 cents. Now, this trades, okay, the bottom line is that this is trading off of the oil and gas equities. You're at 26 cents. What they'll do, this will end up being a reverse split. This correlates directly right into, we go back over to natural gas, and what you're going to see is that the natural gas market, okay, bottom line, yesterday, okay, gets down to a price point of 160, closes at 185. The gas stocks that are inside the GASL, just as the large integrated oil companies got absolutely smoked. And the correlation is direct. Well, they'll end up doing a 10-for-1 or something on it, because the bottom line is that, oil and gas is a wipeout, folks, okay? Stay away from it. That's the bottom line. There's nothing there. If we go take a look at ExxonMobil, this is going to go on for a long period of time. My take is that, guess what? There's plenty of energy out here in an incredible way. The business has changed, and ExxonMobil's telling you that. ExxonMobil's trading back to 2002 levels. Actually lower than that. Here, one second. I just brought this back 20 years. I'm going to bring it back 30 years. Okay, so it's trading at the 2000 level. That's the bottom line. So things have changed inside the energy business, folks, in a huge way. Now, Shanghai. As soon as we come back here, we're going to go over to Asia, because I want to show you something, not only in Shanghai, because this is important to understand about how the coronavirus is moving around the world. China got hit first with it. Bottom line, you get factories that are opening back up. You get the Shanghai markets that have been going higher, as well as copper, okay? Right now, we have the NASDAQ futures up 242, S&P futures up 79. We'll come right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year, or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year, or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190. The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We get the NASDAQ futures up at 249. S&Ps are up 79. So let's go over to Asia. We take a look at Asia. You're going to be surprised what you're going to see over here, folks, okay? Particularly because of the coronavirus, the factories shutting down right across the country. And if we go with Shenzhen first, okay, you're going to see that was up 2.4% last night. But that's not just the whole story. What you're going to see out here, looking at this market, you're going to see that, yeah, you know, if we go back to January 29th, okay, you get the Lunar New Year out here. We were trading at 18.13. They opened back up, and they opened back up down at 15.52. Well, right now, folks, okay, you are 300 points above 15.52. Not only that, what you have is this, is that when we bring this back, and we put this in a larger scale, what you're going to see is that the bottom line is that you are already back to where we were in 2016. The Shanghai topped out at 31.56 in 2015. Bottom line is that this thing is banging into the top of its consolidation now, and that's saying that not only the factories are coming back, but you very well may break the top of this consolidation. So that's the Shenzhen market. So the Shenzhen market, okay, folks, is like the NASDAQ. We go to the Shanghai Composite. That was up 1.282. These are larger companies, less tech companies than in the Shenzhen, okay? Bottom line, same type of setup, however. If we take a look at this, what you're going to see is that the Lunar New Year, you were up there before we closed at 3,096. You dove all the way down to 2,685. And guess what? We're at 3,000 already. Same type of setup. If I bring this back a little bit longer, and put this, you're going to see it's the same type of consolidation. It wants to go to the top of the consolidation, which is the 3,500. You're at 3,000 approximately. That's a decent looking chart, man. It's a decent setup. Now, let's go into the copper market, because the bottom line is that when you take a look at the copper market, China runs the copper market. And what I specifically mean by that, runs the copper market. They are the biggest demand inside the copper market because they build so many buildings simultaneously. And what you're going to see inside the copper market, we'll bring this back on a 3-year basis, is you're going to see that it went to the bottom of its consolidation. This consolidation goes all the way back to 2017 at 247. So 2017, we're at 247. You're at 247, 246 actually in September of 2019. 19, we get down to and reject 247 this month. And that's saying that, guess what? Now you're going to build cars and you're going to try to get up to the top of the consolidation. You start putting that together, folks, okay? And what you're going to see, my take on it, that you have China that's accelerating back up. So what that does is this. That gives us basically a timeline when we're looking at our own markets. And if the market starts recognizing the timeline, you'll see some more stability inside the marketplace. A quick 20% hit in the marketplace, big number, no two ways about that. The aspect of the timeline, if we take a look at it, what I would say is a good 10 weeks. You got to look at this as to the aspect of when it starts hitting, the news and the spread of the viruses look like a good 10-week deal. So we'll see how this shakes out. But I suspect this is the first time that the market maybe is recognizing that. And the real kicker here is going to be that 280.84 inside of the SPY. What you want to look at right across all the, whether you're trading the equities or the futures, you want to see how the market reacted basically to the highs of the lows of that December time frame. Because if you can stay inside them, then you are going to have that monster consolidation. If we have that monster consolidation for a year or two, folks, it's going to be some great trading, man, because the highs and the lows are pretty dramatic. Now, let me give you the bear side of it. So that's your bull side of it. The bear side of it would go like this. The bear side of it is that you get a bounce going. We get this. I suspect is going to be a decent bounce. Okay, you've already pulled back 50 points in the S&P, but and that's after the Trump come out yesterday, says there's going to be a news conference. CNBC said they just talked to people in the White House this morning. There's not going to be a news conference. There's not going to be. There's a stimulus plan is not ready. Bottom line is that you can see the market did not go down another 100 points because of that. I suspect what they are going to do and scramble is that Trump will have something to say this afternoon, because we know how this operates. Okay, doesn't mean that it's going to be the truth, but something's going to be said. That's on the short-term basis. On the longer-term basis, I suspect they're going to have to do something. That's the real bottom line. The real question is, what are they going to do? Does that mean anything? Well, who knows? But bottom line, market out here does want to bounce. How we bounce is going to be the big number. Okay, so now let's talk about the bearish side. What would end up happening on the bearish side is that you take a look at the SPY, let's say. So we came down hard in the SPY, okay? What we didn't do is that when we broke the level of last week of the 28th, we broke it with lighter volume. That was the first heads up that, okay, the selling is subsiding a bit. So now we bounce. The first thing we're going to do, and we're going to be inside it today. We're going to be inside the 285 number. We're at 282. Inside the 285 is the downdraft of the 28th. You get inside that, you start building cars, you start getting into higher price. If we get some volume, and we got volume on the last bounce up here, on the third, when we got up to 313, you had volume. So my take is that this run will get us to at least 313. Then what will end up happening, we're going to find out more about whether this is a consolidation or not on the pullback after the bounce. That's what's going to be crucial, folks, because what we're going to be looking at is that has the selling subsided inside the marketplace? Because if the selling has subsided, you will get a very quick bounce again. The reason being is that the market is set up now. If you thought that before money was inexpensive, okay? If we go over to the 10-year, this is not going to change, folks. The bottom line, bonds are going to pull back a bit, which is going to raise the rate again. But guess what? We hit 0.31 yesterday. This morning we hit 0.73. We're at 0.60. Yeah, this can do a good bounce. It can go up to a 1.2% or something. But guess what? That right across the world again. My take is that we're going into negative rates. That's on a longer term basis. That's how this thing is set up. So that's the first part. Then the second part goes like this. The government, they're going to come up with a stimulus. They have to come up with a stimulus. That's the real bottom line. The question is, what is the stimulus? So picture this. We already have inexpensive money. Now they come up with a stimulus. They throw the stimulus into the marketplace. There's already too much cash running around. There's more cash than there are assets to buy right now. That's the bottom line. What this is going to do, you throw the stimulus into the marketplace, bottom line, the market can once again catch a bid. More importantly, I would say that the stimulus package is going to basically, hopefully, keep the cash flow going for people that are not in the marketplace. And that's what you need. That's the real bottom line, because the economy is cooking along. If you kick it in to where the folks that aren't in the marketplace are going to be able to pay their bills, it's going to be a big difference. Stay right there, folks. Come right back. Yeah, the NASDAQ futures up 280, 259. S&P's up 85. We're coming right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, and hit Watch Tiger TV for the latest market information.
Welcome back, folks. You have the NASDAQ futures up 277, S&Ps are up 91, and Putin, okay? So Putin in Russia, folks, the bottom line is that he's right at the lower house right now speaking, and it looks like Putin is going to be in office, okay? So constitutionally, he's supposed to be out of office, but we know He had already put the last guy in basically 4 years ago, got back in. Now they are setting it up that Putin will be in power to 2036, another 16 years. So much for bottom line. He'll be in power until he dies. That's getting set up right now. Of course, the Saudis and the Russians, they're in a nice oil war out here, and what that's all about is that you had the Russians turning around. They didn't want to reduce the production costs because of the fact that as the production cost stays, the production of oil, as that stays at a higher level, which, bottom line is that we're at, 42 yesterday, 48, goes down to 30. The shale producers in the United States, bottom line, could still make some money. The Saudis decided that, okay, Russia won't go along. They can produce oil for just about nothing, okay? So their production cost versus the Russians is tremendously lower. They crashed the market over the weekend. And by the way this crash worked, folks, is that the market wasn't even open. The Saudis called up their major buyers and turned around and said, I'm going to give you 20% off the oil. So, of course, oil opened down 20%. That war is going to go on for quite some time, and we'll see how this shakes out. The overall take, it looks to me that you have so much energy out there that it's phenomenal. And when you look back throughout the years and say, okay, you thought there was basically not enough oil in the market. When we go back 20 years, it's pretty amazing, actually. There's so much oil, it's unbelievable. Folks, stay right there. We got our man, Mr. Larry Pesavento, coming up. He's going to be growling a problem with you. And, of course, then TD, let's see, 10. Yeah, then I'm right back 10 to 11. TD Ameritrade, Basil Chapman, Steve Rhodes, Dave White. Have a great one, folks. Have a safe one.
Larry Pesavento has just started his brand new service.